Hello and welcome to the show, Tamal.
Thank you.
Now, this week, you wrote how RBI Governor Shaktikanta plays like Rahul Dravid. And I guess what you're also saying is that Das is content dealing in singles as far as monetary policy is concerned. Why do you say so?
Thanks, Abnel. Yes, our governor is a cricket aficionado, if I may say so. At the business standard program, BFSI program on October 31st, he asked the bankers to play like Rahul Dravid, play long term. And he himself plays like Rahul Dravid. That's what the point I am making. He teaches, or rather he preaches what he practices himself, but Rahul Dravid is a player is different from Rahul Dravid, the coach. Rahul Dravid, the player, played long term and pretty slow but steady. Whereas the coach blamed the pitch for India's loss at the World Cup finals. I'm talking about the recent final against Australia. Now, here is a gentleman, RBI governor I'm talking about. He plays like Rahul Dravid, even though he's a coach in that sense, RBI governor, but he plays like that. And so last policy was in a difficult time, relative term. This policy is in a better time. Growth is now catching up. And also inflation side, of course, food inflation is a problem. Last 2 months, inflation was going down. But he has not changed his stance. He has not hiked the rate because he knows that inflation genie is not yet bottled. And he is happy to keep the stance, and also even his approach to liquidity. Even though he is not as aggressive as he had been in October, announcing way more. But this time he said that no, he'll keep a very hawk eye on liquidity. And he will be nimble-footed to do that. So, and he says that my objective, or the RBI objective, continues to be contain inflation at 4%. Till such time, let's not talk about rate cut, etc. So, irrespective of the nature of the pitch, he does not let his guard down. He is ever cautious, if not as hawkish as he was in October.
Right. So it's a long game, and he's looking to take it deep, you're saying.
Absolutely.
And let's stay on the topic of RBI. Paytm stock last week fell almost 20% after the fintech company said it will lower its focus on the loans below rupees 50,000. This comes, of course, after the RBI directive on the same. Now, do you see this softening focus as the new normal?
Well, that's a semantics. You said new normal or normal, but the fact is this: the small ticket unsecured personal loans, which had been growing at a speed, which is difficult to maintain in the past 2 years, has to come down. And if you see that, there are a few interesting facts. One is this: the delinquency, the borrower's ability to pay back is suspect now for some segment, and it's going up. Second is this: many of these borrowers are over leveraged. They have taken more than one loans, maybe 3 or 4 loans. And third is this: many of these borrowers are not from our familiar cities and towns, which means this is a product which has been probably missold, if I may say so, quote unquote, to people who don't understand what they are doing. And other part is this: I have seen in terms of few lenders, they use a hook saying that, look, if you come and take the loan, you will get into this credit bureau database, and this is a sort of, we are formalizing your migration from informal to the formal sector.
Right. And so last week we also heard about the wage pact, the 17% hike that bankers have agreed to. Now, I have to ask you this: do you think there's a better way than this protracted pattern of talks that have to resume every few years?
Yeah, this is a 5-year pact, and typically it takes a few years. Then the bankers get the arrears at one go. I'm sure they are happy with getting the arrears, but why would they wait for so long? But my question is, why would there be an industry-wide wage pact? Because the bank A is different from bank B, and bank B is different from bank C. Now, in the past, there have been instances where a bank wanted to get out of the wage pact. For instance, Bank of Baroda, I know for sure it did, but it never happened. It is unfair. I think it's unfair to the people because, as I said, the different banks, different managements, even though all of them, particularly, we are talking about the public sector banks, the majority owner is the government. But again, to use the cricket analogy, they are playing on different pitches. Now, why would there will be a similar wage increase for entire industry, whether while one bank is performing too well and one bank is not performing that? Now, you can always ask the question, why would the employees be penalized for the bank's performance? Because it's a senior management that that drives a bank. But I don't agree with that. I think it's the entire composition of employees that drives a bank, and you should get out of the wage pact.
Right. So going solo may actually be in their best interest, is what you're saying.
Trade unions will hate to hear this. Trade union lead.
But thank you so much for joining us, Tamal. We'll see you next week.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.